The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure. Network News presents When the Dollar Blinks, Real Estate Assets Take Center Stage. The story today is not simply that gold prices are rising. It is that the US dollar is weakening. Real rates are softening, and global buyers are rushing towards scarce, non-sovereign stores of value. Spot gold keeps hitting new records, recently trading near $3,700 to $3,730 per ounce, as markets anticipate additional Federal Reserve cuts and a softer dollar. Silver is also climbing, reaching its highest level in more than 14 years. Central banks continue to be consistent buyers, with record levels of gold added since 2022, underscoring a broader trend of de-dollarization. In this environment, the setup for mining equities is increasingly compelling. With gold consistently reaching all-time highs, the valuation gap between bullion and quality mining companies is primed to close, creating an opportunity for investors seeking leverage to this cycle. One company positioned to take advantage of this dynamic is ESGold Corporation, ESAU on Canadian Securities Exchange, or ESAUF on OTCQB, which has a fully funded business plan, is backed by permits, and offers near-term profit potential. With a clear pathway to production in 2026, ESGold provides investors with leverage and scalability that a few junior miners offer. The company is a top contender in a strong group of notable mining entities, including Franco-Nevada Corporation, Alamos Gold Incorporated, Eldorado Gold Corporation, and OR Royalties Incorporated, that are jostling for position in a precious metals market that is capturing the investment spotlight. ESGold's strategy centers on a tailings-first approach, with Montanaban in Quebec as a primary near-term development. With recent financings in place, ESGold has signaled that it is fully funded to complete Montanaban construction and advance validation in Colombia. The economics of tailings reprocessing are attractive because feedstock is already near surface and requires lower costs and energy consumption. ESGold's upside is not confined to near-term production. The company has invested in exploration and geophysics. ESGold has also been progressing a multi-jurisdictional growth plan, including a binding MOU in Colombia to validate a replicable clean mining blueprint across legacy districts. Broader rotation onto hard assets. Miners' torque is back. A classic cyclical rotation is underway as market leadership broadens beyond mega-cap tech into more economically sensitive and commodity-exposed sectors. Profit-taking and crowded growth names has been accompanied by renewed appetite for under-owned hard asset equities. Historically, producers and near-producers capture the richest multiples late in a cycle because incremental gains in commodity prices feed through operational margins, improving cash flow and shortening payback periods. That dynamic is what analysts refer to as miners' torque. Small moves in metal prices translate into outsized earnings and net asset value improvements for companies with fixed cost bases. A softer US dollar and falling real yields turbocharge interest in non-yielding stores of value. When real yields decline, the opportunity cost of holding gold falls and investor demand rises, both from funds and long-term official buyers. The World Gold Council surveys and demand data demonstrate significant central bank accumulation and a resurgence of ETF flows in recent quarters, underlining the depth of structural demand beyond short-term speculative positioning. Together, Central bank buying, renewed ETF demand, and easing real rates position gold's rally as not just a commodities move, but also a broader currency and macroeconomic story. Market positioning and flows have already changed. Miners-focused ETFs and equity baskets saw large inflows earlier in the cycle and have remained a vector for investor exposure even as flows have rotated between metal ETFs and miners ETFs. Strategists note that the miner earnings power and price-to-NAV multiples remain a focal point for re-rating discussions among institutional investors. The re-emergence of gold and silver as portfolio hedges and speculative banks for inflation FX risk has put a premium on companies that can demonstrate near-term production and low capital dilution. Why ESGold fits the market opportunity. ESGold Corporation is an example of the kind of company that can benefit from this macro setup. ESGold's strategy centers on a tailings-first approach, with Montanaban in Quebec as the primary near-term development, designed to generate low capex, high-margin cash flow early. That business model reduces the typical capital drag that delays value capture and lowers dilution risk, two attributes the market rewards in a rising metals cycle. ESGold has publicly described Montanaban as a fully permitted, low-footprint project with strong economics in the updated Preliminary Economic Assessment, or PEA, and the company has completed financings to fully fund construction and early production. Near-term cash flow from Montanaban would give ESGold a path to internally fund exploration and growth. The company's updates emphasize a staged plan. Commission a compact plan to reprocess tailings at low capex, begin sales and positive cash flow generation, and then redeploy proceeds into exploration, satellite processing, or replication of the Tailings-First blueprint elsewhere. In a market where investors price cash generation and optionality, the combination of early revenue and extra upside via exploration is attractive. Mining press coverage and company releases note, ESGold is fully funded to finish construction and to continue its Colombia joint venture validation work, important credibility markers for investors' confidence. ESGold's near-term cash flow thesis is not merely a marketing line. The company's updated PEA highlights low capex, attractive margins, and tax attributes that are expected to enhance first year's free cash flow. For investors who prefer companies with tangible, early cash visibility, ESGold's model aligns closely with the kinds of projects that tend to re-rate fastest during commodity upcycles. Of course, construction timelines, processing recoveries, and commodity price volatility will be the key drivers between a promising PEA and delivered cash flow. Primed to be the next Canadian producer. With recent financings in place, ESGold has signaled that it is fully funded to complete Montanaban construction and to advance validation in Colombia. Public filings and company announcements disclose the financing packages and capital allocation plans that underpin its move to production. For investors, the distinction between fully funded and experiencing funding gaps is critical. Companies that can show secured capital to reach production reduce the likelihood of dilutive equity raises in the future. ESGold's capital plan, therefore, materially improves the investment case versus many juniors still looking for build-out financing. The market tends to reward companies that combine low capex with high margins. Tailings reprocessing projects commonly require much lower upfront capital than greenfield mines because processing infrastructure can often be compact and because tailings have already been processed. ESGold's updated PEA and company commentary point to a low capex profile coupled with expected robust operating margins, both attributes that, in the context of rising metal prices, translate into meaningful free cash flow leverage and improved valuation multiples relative to peers with heavy capex queries. Mining analysts often cite such profiles as best positioned for a bull market due to speed to cash and low capital intensity. High margin orientation through tailings reprocessing. The economics of tailings reprocessing are attractive because feedstock is already near surface, with known gold and silver grades, and requires lower grinding and lower energy consumption compared with primary ore processing. ESGold's Montanaban PEA highlights precisely these advantages: low operating costs, straightforward metallurgy, and short timelines to ramp. Low capital intensity and high recoveries, if confirmed at scale, can generate industry-leading operating margins, especially as precious metal prices have surged. That margin profile provides strong upside if gold and silver prices continue to set new highs and creates a buffer against short-term commodity dips. In addition, permitting and environmental risk are typically lower for tailings projects when they adopt modern, reclamation-centric approaches. ESGold has emphasized a clean mining or low-impact narrative and is building Montanaban as compact, permitted operation. That approach lowers timeline risk relative to many greenfield projects, which face prolonged environmental assessment and community consultation. The company's permitting posture and local partnerships will be a crucial part of the risk-reward calculus for investors watching near-term delivery risk. Exploration torque and the Broken Hill analogy. ESGold's upside is not confined to near-term production. The company has invested in exploration and geophysics, most notably ambient noise tomography or ANT imaging that extends to depths of 1.2 kilometers and suggests structural continuity and potential deep targets below the tailings and known mineralization. Advanced geophysics, if corroborated by drilling, can create district-scale upside. A working tailings operation plus a discovery pipeline is the canonical cash flow now, discovery upside later thesis investors find compelling. ESGold has drawn structural analogies, such as a Broken Hill-style analogs, to frame the scale potential of the district, signaling that the company views Montanaban as a platform rather than a single asset play. This embedded call option concept, where immediate cash flow funds exploration that can deliver step function asset revaluation, has driven outsized returns historically when companies convert exploration success into resource growth while already producing. The combination of geophysics, or ANT, a near-term processing plant, and a permissive jurisdiction gives ESGold optionality that is unusual among small producers and late-stage developers. Investors will watch drill results and the path to resource updates closely, since the market rewards demonstrations of resource growth built on production cash flow. Scalable, multi-jurisdictional path with Colombia MOU validation. ESGold has also been progressing a multi-jurisdictional growth plan, including a binding Memorandum of Understanding, or MOU, in Colombia to validate a replicable, clean mining blueprint across legacy districts. The Colombia engagement illustrates a strategy to diversify operations and scale a tailings-first model in jurisdictions with legacy infrastructure and existing mineralized footprints. Diversification across jurisdictions reduces concentration risk and creates additional avenues for cash generation and asset replication. A validated blueprint in another country can materially multiply the company's growth vectors. Replication, if executed with careful environmental stewardship and local partnership, can accelerate company growth without proportionally increasing technical or permitting risk, because tailings projects often fit within existing environmental frameworks and use proven remediation technologies. For ESGold, successful validation and pilot production in Colombia would provide both a near-term second cash flow stream and a template for broader scaling across the Americas. That kind of trajectory is precisely what value investors seek when assessing junior producers with production optionality and exploration upside. This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.